Hi everyone, and welcome to the Treasury Tomorrow podcast, a podcast where we tackle the game-changing and impactful technologies and transformations that are going to affect the Treasury of tomorrow. I'm your host, Nick Pedersen, the head of digital at NatWest Investment Bank, and today we're going to tackle the topic of digital assets and central bank digital currency. We're going to try and debunk some of the myths associated with these terms and start with some core definitions on what they mean. Challenge some of the underlying assumptions associated with these ideas, and most importantly, try and leave you with some tangible things that you can think about and prepare for when it comes to digital assets, central bank digital currencies, and the Treasury of tomorrow. Now, to take on that task, I decided to enlist the help of not one, not two, but three distinguished experts from different parts of NatWest Group to help unpick digital assets and central bank digital currencies. First of all, Lee McNabb. Lee leads payment strategy and research in our Payments Center of Excellence and is a regular thought leader speaker about the future of money and central bank digital currency. Lee, thank you very much for taking the time to join us.
Thank you, Nick. Thank you for having me.
Secondly, Oliver Butcher from NatWest Treasury. Oliver leads liquidity, portfolio and investment management, looking after all of the sovereign and non-sovereign assets the NatWest Group put to work, and is heavily involved in experimentation and pilots when it comes to digital assets. Oliver, thank you for taking the time to join us today.
Thanks, Nick. Pleasure to be here.
And finally, Phil Stewart, director in our growing digital capital markets unit, which is looking at tokenized assets and bringing digitization to everything from bonds to highly structured and complex securitized products, even involving climate and ESG solutions as well. Phil, thank you very much for being in.
Thanks, Nick. And hello, everyone.
Phil, I'm going to go straight to you, if I may, and start. We want to start with a broader question around definitions, and we're going to talk about digital assets first before we get into central bank digital currency. So potentially one of the hardest questions of the day, but if you wouldn't mind, can you give us a definition of what a digital asset is, and then beyond that, why you think there is so much talk, so much spotlight, and so much discussion around digital assets in the industry?
We've been representing assets digitally for many, many years. Digital money is already represented, the central bank, commercial deposits, commercial reserves. But most people nowadays, they think of cryptocurrency. And that's the first thing that everyone thinks of now when they think of digital assets and, the crypto assets to go with them. But really, crypto assets are just one part of digital assets. Digital assets is far more broader than that. It's used for an ever-expanding range of purposes, and they can be assets in themselves, such as your bitcoins and things like that, or they could be a means of payment, stable coins typically these days, or they could be used to represent or be linked to another asset, and that's really where our primary focus is. And of course, underpinning all this are a range of technologies. Nowadays, that's everything from digital signatures, digital IDs, cryptography, it's smart contracts, it's distributed ledgers, and all the associated technologies that go with that. But what's really got the financial markets talking about this is how we can transform our markets that they are today, how we can better support our customers and their ambitions. And I think it's quite an exciting time, really, to look at this as an industry.
Thanks, Phil. So it's probably fair to say then a definition of digital assets is quite broad, and really is anything that is digitally represented of an underlying asset itself. And I think you've used crypto as an example of an asset, or equally a bond would be an asset in itself too. And then I guess, Lee, to sort of bring you in here and your expertise on the currency side, we should distinguish assets from currency in some respect. And perhaps when it comes to central bank digital currency, could you share with the listeners a definition of what that really means?
Yeah, no problem. And Phil kind of covered it in some respects in terms of ultimately it's digitizing an existing asset or currency. From a payments perspective, I've been looking at this for a couple of years now, back from when Facebook had the Libra consortium and announced the stablecoin, but it goes back further than that, to be fair. To very quickly summarize the kind of spectrum, as I call it, from a digital currency perspective, which links closely to payments. You've got your kind of traditional, as Phil said, crypto and inverted commerce, your likes of your Bitcoin that everyone has heard about and loves or hates. And and then through the spectrum to provide, I guess, more validity or, I guess, comfort from an industry perspective. We have stable coins, which are, you can debate whether they're stable. There's plenty of history there. That's a separate podcast. But providing more stability in terms of linking the crypto asset to a fiat currency, so a traditional currency. And since that Facebook Libra announcement, central banks all over the world have heightened their efforts to look at how they would digitize existing public money. So central bank digital currency is exactly what it says on the tin. The central bank issued digital currency, very much like cash in a way, but digitizing it and offer additional benefits. And we'll touch on it later in more detail. Different progress across the globe from different geographies and economies based on their individual needs, but kind of fascinating topic that links heavily to Phil's world and to Ollie's world in terms of movement of said money, settlement of said asset trades, etc. So that all these pieces of the puzzle come together.
Actually, and I agree with you. I think the motivations for central banks pursuing digital currency probably started with the Libra announcement and have evolved since then. So we'll touch on that later, as you say. But back to digital assets in the context of financial markets, Phil, and Ollie, Oliver, I'd like to bring you in as well. But sort of broad question, what do we think tokenization and digitization of financial products will mean for financial markets?
As a customer, digital assets is all about the opportunity to innovate and deliver a more efficient financial markets infrastructure. The two big ones that people tend to speak about are automation and removing of unnecessary intermediaries that new technology has opened up for us. So it is the next stage, or it could potentially be the next stage of evolution to make our financial markets more efficient. And we should forget, like, in our short careers, financial markets and their efficiencies continue to evolve. So we spoke about it previously, Nick, but I remember my first ever boss. He talked about running bearer bonds up and down the streets, taking coupons manually off pieces of paper. Or we moved away from that. We made our markets more efficient by centralized custodians who digitally represent all of that for us. And now what we're talking about is, will digital assets, new underlying technology, provide an opportunity to be even more efficient with our financial markets?
When you phrase it like that, Oliver, it becomes a little less daunting in that what you're saying is this is just another wave of technology called development. So like moving computers onto the cloud or building services through APIs. Really, we're just seeing the next wave of technology in financial markets. And it seems a little bit clearer to me when you describe it like that. Phil, is that something you broadly agree with?
Yeah, exactly. I was going to say, really, it's improving what we already understand well. And that's what this is all about. It's trying to take what we do, what we understand, all the kind of the market developments that have happened over time, and just making them even better. And that's really what we're looking at. Yeah.
But back to both of you, if we look at it like that, then with every new technology as it gets implemented, certain risks arise, certain things need to be accounted for. Certainly 10 years ago, it would be a little bit unheard of to move banking technology onto a cloud server. And now that's broadly accepted. But it takes a while for these technologies to evolve. But what do you think, Oliver, from a customer's perspective, are some of the risks or things to be aware of as this technology ripples through?
Yeah, the link you made to cloud computing is excellent, but taking it back to maybe a high level principle, it's always the risk of jumping on a technology innovation too soon, and then that doesn't materialize to be the next evolution, or it's moving too late and actually you're playing catch up and you're incurring extra costs because you're behind the market after that time. Now, what do we see in digital assets at the moment is experimentation. Phil and the team are doing a lot of work in that space. And I think what we're seeing, Phil, welcome your views here, is the weight of evidence is continuing to grow that innovation in this space is possible and efficiencies can be gleaned. So what we're waiting for now is network effects. And Nick, your example earlier, cloud computing, network effects, the regulator starts to come in, provides greater clarity. All of a sudden, the market starts to move. And therefore, my sense as a customer is I want to be in touch with developments in this market, making sure I'm aware, making sure I'm not behind the pack, or if even better, I can be ahead of the pack and positioning my business for the best possible outcome.
Phil, as the expert on certain products, so I'm looking specifically at bonds to Ollie's Oliver's suggestion. What do you think the market needs to happen in the market for it to be really well trodden and become a standard use of this technology?
And I think one of the big things here is people are already moving forward, right? From the largest supranationals to corporates, right? Everyone really is now saying that they can see what the benefits are in general, right? They can see that there is potential here. And that's the first step, right? We've got all these pilots that call them pilots, call them real transactions. They're actual obligations at the end of the day. People are pushing forward with that, and they're trying to figure out really what does this mean for them, and how do we get to that developed market, right? So what has to be in place? Obviously, you need to have participants. You need to have your issuer investor base there. You need to have people that are comfortable to deal with and that understand the technology, understand the differences. Critically, I think when we look at this, it's very easy to get lost in what's the most complex thing you can put together to really use all the technology. But I personally think you start with the most simple thing that you can do and divorce the new from the old and focus on, well, what are the new risks? What do I really need to be aware of? Does this trade differently? Does it have a different price? Are there any different liquidity considerations? And then once you do that, figuring out, well, how do we solve those problems? So do we need to make sure we've got an active repo market? Do we have active secondary trading? What kind of arrangements have to be in place? So I think it's just really asking the difficult questions by experimenting, iterating. And we're not expecting this to move overnight. We're expecting this to be a gradual development where the market slowly learns. And at some point, it will, we think, be more efficient, and you will see that transition over. And that's really what we're all looking for right now.
One of the criticisms leveled at distributed ledger and tokenized assets is the technology for technology's sake argument. Have we moved past that? Are we at a tipping point where there actually are underlying business use cases that make it more than just technology, or are we still meandering that path, Phil?
I think people are starting to realize that there's some very nice properties of it, the accountability, the transparency that can be provided by this kind of technology. If we look to things like use of proceeds, or we look at some of our sustainability linked bonds, and we start to look at some of the experiments that are already taking place, say in Japan, where I think they were outputting the power output from say it's a wind farm, or it could be a coal-fired power station. It doesn't really matter, but one way or another, if you're writing that onto the blockchain, you can then reference that in your bond to vary your coupon. So if I'm particularly green, I could step my coupon down, or I could generate carbon credits off the back of it, or anything like that, really. I think all these things are very imaginative, really, of how can we really start to hold people to account in the market and use the properties of this technology to only enhance that. We can clearly do these things today if we want, but this is just, again, stepping up the governance that's around that, stepping up that transparency and accountability, which we think are pretty critical when we look at this technology, really.
I think, Lee, we're slowly getting into the payment space here with the way Phil describes some of the features and benefits of using a blockchain. So to drop into central bank digital currency, what was your take on we start with the UK specifically, the UK government and the Bank of England's view on central bank digital currency, which is changing, but what was your latest take on it?
It's an evolving view. I'll start with what my take is on the perspective, and then come back to kind of what our NatWest kind of view is. And at an industry level, the Bank of England has been on a bit of a journey over the past couple of years, right? I mentioned Facebook and Libra earlier. I think actually global central banks out, but from a Bank of England perspective, got a couple of discussion papers out looking at the future of money. It's been very much focused in the retail space. A lot of what we've discussed here is probably arguably more in the wholesale space. The Bank of England, in its latest actual consultation, as opposed to discussion paper, is very much looking at the retail payment opportunities. It touches on wholesale, but then themselves have said that with existing improvements in central infrastructure like real-time gross settlement, there is more of a question over whether a wholesale CBDC would be needed or not. But it's important for the viewers to be aware of the differing types, if you like. From a retail perspective there, as you said, their view is changing and evolved. I think the likelihood and inevitability of this becoming live within, as Ollie put it earlier, our careers has increased. I think Andrew Bailey said it himself, there's a greater than 50% chance. So I don't know any gamblers out there whether that means you would put money on it or not. But with Aintree being this week, perhaps you would. But yeah, their view is twofold in terms of drivers. One is competition innovation in the payment space and beyond. And the second is a kind of cash as the anchor. Their role as a central bank in fiscal, monetary stability and management, etc., which I think probably got highlighted more with the Facebook stuff. I mean, there's probably an implicit rationale, which they're probably not overtly stated, around the threat that still exists from a big tech or another private institution coming to the market with their own like CBDC or more of a stable coin. But it's quite fascinating that as they have moved from understanding the market into more of the how we could potentially deliver this, we now are in a process for the next couple of months. I think June is when the consultation deadline ends for the industry as a whole to go back on the questions around how this might work, what benefit it could potentially bring. To touch on the kind of NatWest view, and I think some of the other incumbent banks, there is still, I think, a question that needs to be answered around what need is this serving? You mentioned it earlier, Nick. Different economies and geographies are kind of looking at the CBDC opportunity or option in different light now. Sweden have a cashless-ish society, so are grappling with how do we control public money and make sure that from an inclusion and exclusion perspective, we're doing what we need to do. There are other examples globally where the digitization of central money makes sense. In the UK, we have a very evolved payment infrastructure already. I've mentioned RTGS, the improvements that are coming there. From a retail perspective, predominantly we use cards, we use wallets. We are improving our central faster payments infrastructure through new payment architecture. So there is still a big question as to why are we doing this? Because without sounding too negative, it's going to be a very costly and expensive investment, shall we say. We just need to make sure that from a customer perspective, which is where we should all be looking, right? To Ollie's point earlier, how do we explain this to them? How do we articulate the benefits to our customers, whether it be retail consumers or indeed our corporate base, because they'll still need to utilize this as well. And what does it look like to them? How do we portray it? How do they use it? I was on a panel recently. I used the example of my 8-year-old daughter. In the time frame that the Bank of England are talking about, she'll be a teenager, and I'll be having to grapple with trying to explain to her the difference between cash, physical cash, because it will still exist, digital cash in terms of central bank money, and existing commercial bank money. And I really struggle with how I'm going to do that. And I work in the industry, and it's that and other challenges like, what's the business model and commercial model for this that we as industry need to be working collaboratively with the Bank of England to properly understand.
Lee, if I could I'll just jump in, because there was one other very additional interesting point that came out of the consultation paper that's particularly, at least for me, from a Treasury point of view, that was the guidance on the amounts that you could potentially hold under a CBDC, a UK CBDC. And the guidance they were alluding to, somewhere between 10 and 20k be transferred into your CBDC account. Now, that is materially higher than almost any other geography that's talking about a central bank digital currency. The pro, obviously, it makes it more usability for our end customers. The huge negative, in my view, that we'll talk a bit about later, is it poses a very significant financial stability risk to the UK. 10 to 20k, simply times by the amount of adults in the UK, will result in a third of total commercial bank deposits leaving the sector. If that happens, banks have to pass on additional cost to end customers. So financial stability risk increases, and end customers could suffer. So from our perspective, it's a pro and a con here, with the con potentially being quite negative.
Yeah, and that's what we need to, it's a great point, Ollie, we need to, as an industry, as the Bank of England, looking at the how, will really articulate what the challenges and the pros and the cons are to this, because there will be opportunity as well. They talk about something called a PIC, payment interface provider, which will effectively be the wallet that will hold the central bank liability. That's an opportunity and a threat, right? Opportunity for fintechs, for new emerging companies. And if I'm a big tech, I'm looking at that thinking, oh, okay, so I can get access directly to the consumer. And I don't necessarily need to worry about holding the capital needed, because that's going to be staffed with the central bank. So as an industry, collaboratively, we need to grapple and work with the Bank of England to highlight what the pros, opportunities, and the cons and negatives are from a customer and industry perspective.
Let's unpick this a little further, because I think it's a really interesting topic, certainly with the first quarter of the year and the challenges is seen in the banking sector. You described only the scenario where deposits migrate from commercial banks to the central bank, but as a customer, £20,000 isn't huge for a corporate, and wouldn't there be a wonderful place where corporates could be deposit all of their cash with the central bank, entirely counterparty credit risk free potentially, and that's a good thing in the way for a corporate. I appreciate what you're saying about the banking, the implication of the banking sector, but is that a scenario that the corporate should be pursuing and looking towards?
The CBDC is primarily aimed at benefiting end consumers. So you and me as consumers of goods, and corporations will then facilitate our payments as consumers. So if I'm individually looking at the benefit of a CBDC from a consumer perspective, what do I like about it? Well, you could say I like it because it's risk-free, but up to 10 to 20k, I'm already risk-free as a deposit in a commercial bank, because I have what the government guarantees up to, which is 85k already. So my commercial bank money is already entirely safe. So I don't think it changes the credit risk perspective. So for me, the only potential benefits, and me welcome other views on the call, is potential efficiency and innovation in this sector. But I would argue commercial banks are already pushing as hard as we can to be as innovative and as efficient for our end customers in terms of payments. So it does lead us back to the question of why.
So the innovation point is one well made, Ollie. It's not just the industry as a competitive element that is driving innovation. The regulators themselves are keen to drive innovation. We've not just got the infrastructural change in the UK in payments. We've had open banking for a few years now. It's at an inflection point. There's no doubt about that. But we're seeing scale adoption in certain use cases, and some of the other geographies don't have the level of innovation and competition that we have in the UK. So again, Ollie, you're right. It does come back down to that. Well, why would we do this? And would we not solve any potential unmet needs or pain points through the traditional current investment that we are making as an industry? And that's, I think, part of the challenge we need to work with the Bank of England through to properly understand where the answer is.
Let me challenge that a little bit, Lee, if I may, in terms of if we go back to the discussion earlier on, this is evolution of technology. There's an element of inevitability in some of this, in that if the technology does prove to be so efficient, at some point we really should migrate to that new technology. So would we not argue that we should be doing this now, because at some point in the future, central bank digital currencies across the world will exist and we'll be late to the game?
And there's multiple points to that. Like, I think the central bank would argue that. The point I'd like to make is that we need to separate the technology from the concepts argument. A central bank digital currency does not need to be on a distributed ledger technology. It arguably is the antithesis of that. It's central bank issued money that just needs its own ledger. So it doesn't have the challenges that DLT, to Phil's point, look to overcome in terms of trust and transparency, etc. If you can't trust and have full transparency from the central bank, then what can you have? So I do think we need to divorce that. But you're right, ultimately, as the world continues to tokenize, continues to get digital, we should be challenging ourselves as an industry. And I think the consultation is great because it gives the industry the opportunity to really look inwardly and outwardly at what those opportunities are. And if the central bank digital currency is the concept that helps drive that, then let's understand where it could potentially take us and what benefits it could potentially bring to our customer. I don't by any means want anyone to think that banks have an overtly negative view about this. We are obviously open for the collaborative approach and want to seek the opportunity, but recognizing that the path that we're already on, I think, is really, really important, and we can't lose sight of that.
To sort of add to one of the concerns I have as a banker, and if you go back to the financial crisis of 2008, some of the circuit breakers that existed in the system were probably quite useful for managing contagion. And in a world where everything payment related is real time, digital, the flight of deposits across the ecosystem could be, unmanageable in some respects. I don't know, Ollie, Phil, if you've got views on that, because it seems that we're talking about wholesale CBDC being an enabler, but it could also be quite a big risk to the stability of the system.
You're absolutely correct, Nick. One of the lessons we've thought about since Silicon Valley Bank and Credit Suisse. Credit Suisse is a great example. At year end, on paper, it had one of the best metrics from a financial stability point in Europe. Its liquidity metrics were very high. Its capital metrics were very high. All it really took was a reputational shock to really put Credit Suisse at threat, and the digital points that you allude to exacerbate that threat. So if in the future, let's imagine a world, let's take us forward in time, at NatWest is a payment interface provider for a CBDC, and it also has a commercial bank account on the same app. Let's say we have it on our same app, making it very easy for customers. Well, let's say there's a negative headline that comes out. All it would take is a quick click of a button to move it from our account to a central bank account. That is opening up a brand new route for potentially bringing down a bank overall. And that is a very significant concern that I would have during a period of stress for the overall UK financial stability. So in short, I completely agree with the concerns that you're raising.
We're actually in a world now where it's not the same as 2008 in that you've seen from some of the recent stuff of SVB, a lot of it was driven through social media and through the utilization of messaging platforms for people to then quickly and easily move their money out through the use of mobile apps that didn't have the maturity that we see now. So the risk is very different, and to Ollie's point, greater.
Okay, so there are some pretty clear concerns and challenges that we need to overcome with central bank digital currency, which feels like central bank digital currency won't be fully implemented and around in the next month. But at the same time, a working CBDC would enable digital assets and tokenized assets to thrive. How can we keep digitizing and looking at tokenized assets whilst the implications of CBDC are worked through?
I think it's a great question. And when we look at we don't know when or if a CBDC, at least in the UK, will be implemented. We know there's already some around the world, right? But we also don't know what form it's going to take. So I know that there's a lot of fear that we're talking about here, potential impacts to it, and the very real impacts, right, that we have to consider. But again, we don't know what it's going to look like. So I think we need to take everything here with a little bit of a pinch of salt while we work through that. But what can we really do today? And commercial banks, for instance, we already essentially create money, right? That's part of what we do today. And so we could go down the road of a commercial bank digital currency. Indeed, I'll just quote from Andrew Bailey, who was speaking at the Institute of International Finance recently. I think it was just the other day. And he said it'd be preferable not to disturb the existence of both inside and outside money and the broad balance between them. I think that's quite critical to me. He's very clearly alluding to the concerns that Ollie's already talking about here. And also, he called out the fact that it needs banks to think about actual commercial bank digital currency, and thinking about how we can bring that into the system. And really, can we offer the same advantages now, such as being able to say a token for token transaction, whether that's one currency token for another currency token, or whether that's one currency token for an asset token, or any combination thereof, I think is something that we can achieve now if we really want to. And that to me is one of the most exciting things about looking at this now, is that we don't necessarily have to wait. Can we make things better with a CBDC? Yes. If we rush, we can lead ourselves into the problems that we're already talking about here, the potential concerns, the massive liquidity runs. Again, we shouldn't rush into any of this, but we should realize that we can do things now.
We've touched on quite a few different topics here, and obviously we've talked about Andrew Bailey's speech. In terms of material, white papers, or pieces of additional research that the listeners could go to, don't know if you've got any recommendations that sort of drop off the top of your head.
I think because we're in a consultation period at the moment in time from the Bank of England, then I suggest, granted, even from a Treasury perspective, you need to understand where the future of money and thus payments and thus settlement may go. So engaging with the Bank of England is open to anyone, I think is worthwhile. So reading through that consultation paper, and there are two. One is focused on technology, one is focused on the retail payments aspect. I think is time well spent.
If I was to choose one, I would probably say the recent UK jurisdiction task force legal statement, specifically on digital securities. I thought what was quite nice about this is they concluded that English law can already support the issuance and transfer of digital debt securities without waiting for any changes to law. I think that really highlights the flexibility of English law. I think it's quite important for our industry as a whole, really, to say that this can happen now.
And Ollie, as a customer, as a treasurer, where would you go to or would recommend in terms of further research?
On NatWest, on digital assets, I'm just obviously contact Phil and NatWest. But I think on the latest views on CBDC, we've talked about a lot. It's a very short speech, but halfway down, there's a very good, short, succinct view from the lead on this, the governor of the Bank of England. And I think you can get a very good sense of pros and cons on CBDCs from that.
And Ollie, staying with you, if you were to distill this quite broad discussion down into sort of one or two key recommendations for Treasury professionals to do next, or think about next, or to be aware of, what might it be?
Just change is coming. You can get a sense from the amount of dialogue here that this is the next stage of evolution. Be aware, be in touch, keep in touch with the pack.
Yeah, it's great advice, Ollie, because your earlier comment on, you can risk not being part of the pack, or you can risk being too soon. The best way to solve for that is to just be aware and keep in touch and move as the market moves. Phil, as a capital markets expert, what would you suggest is one key takeaway from today?
I think building on Ollie's point there, it's stopped the conversation now. If you're to look at this, you can realize it can go in many directions. I think we need to ask very challenging questions now. And we're not going to do that unless we're talking to each other. And that's the only way we're really going to shape this new emerging market in a way that we're all comfortable with and that really offers an advantage over today.
Good. And then Lee, close us out with the payments and currency and money view of what's the one thing to be really aware of.
It's always hard to go last in a question like this, but I would just say educate and engage.
Well, I hope we've educated and engaged the listeners to a sufficient degree. Thank you very much all for joining us. Thanks for your time and insights here. All that leaves me to say is I hope you've had some takeaways. If there's any further questions or comments you have, please reach out to us directly. And don't forget to follow NatWest Commercial Institution on social media. Get the latest episodes of the Treasury Tomorrow podcast as they're available. We have a number of fascinating topics up on the docket next. Thanks, Lee. Thanks, Oliver. Thanks, Phil, for joining. And thanks all of the box for you for listening.